Have you ever wondered how the property market you're looking at is performing right now? The old way was to pick up the phone and call your local real estate agent. Be like, hey buddy, how's the market going? You might call your broker. We get that question a lot, but that is no longer how to do it in 2024. In this video, I'm going to teach you three very simple metrics that you can do from your computer to assess how your property market is performing right now. This could be particularly valuable for you if you own a home and thinking about selling, if you're trying to buy a home, or if you're just interested in how your market is performing. If you're interested in my thoughts, this video is for you. Hi, I'm Reedham Syed, founder of Confidence Finance, and today I work with thousands of property investors, helping them grow, build, and scale their property portfolios. So let's get into it. The first metric you want to look at is actually a little bit higher level than the local market you're operating in. It's housing finance data. Now this is, in my opinion, one of the most underreported and underutilized data metrics to assess how an area is going. I'm going to show you why. Housing finance is very simple. Who is going and getting a loan? Is that increasing? What type of loan are they seeking? And where are they seeking it? You get all of this data every single month from the ABS, and they collate all the mortgage brokers and all the banks, all their applications, they put it all together and give you that data metric. If more people are applying for loans in your area, you know that demand is rising. If more property investors are looking for loans in your area, you know that your market's probably doing pretty well and prices are probably moving upwards. Those two correlate pretty well with each other. Housing finance data is one of my favorite metrics to look at. As mortgage brokers, we get a little bit of an early taste for this just before the data comes out. If our phones are ringing really heavily and we can see it in our sales data, it probably means that housing finance data is doing really well. We don't do anything magically special and then somehow our business starts flying. It doesn't really work like that for established broking businesses. They see it in the day-to-day interactions that they have with customers. They also see it in the number of conversations that they have and in the quality of conversations. Sometimes in down markets, it's a lot like, hey, I'm assessing the property market. Hey, I'm thinking about doing something. Hey, I want to be prepared. That's the typical type of conversation in 2018, in 2022. That's what it sounded like. When markets are doing really well, it is very different. Sometimes it's, hey Rita, I must buy tomorrow. Can you please get my pre-approval done yesterday? I'm following you up today, even though I haven't sent you any documents. I need it. That is the type, in terms of quality of conversation that we have, that it completely changes. Behavior changes, and we can feel that. That's why brokers get a little bit of an early insight into housing finance data. Looking at current data, it's really interesting. Housing finance has improved from about January 2023. This was the end of the last property downturn where Sydney property prices fell double digits from the back of interest rate rises. Since then, owner-occupier housing finance is up 25%. Investor housing finance is up 45%. Prices, they're up about 10-15% as well. So there you can see it in New South Wales specifically. Housing finance went up, so too did prices. The trend looks very different. If you looked at the trend, it was coming back down, and then since then it's gone back up, and house prices have simply ebbed and flowed following this trend around. In Victoria, it's up about 23%. There's not much investment activity in Victoria. Very interesting. Only up 22%, which sounds like a lot, but it's half of New South Wales and much lower than Queensland and WA. Queensland up 70% in housing finance for investors in the last 18 months. And WA, check this figure out. I'm going to tell it to you twice. 138% increase in housing finance for investors over 18 months. 138%. When I said that there's a bit of a herd out there following each other, you can see it in this number. 138% increase in a year and a half. That's crazy. That increase is so large, and it's concentrated around investors who kind of come in like a stampede and go out pretty quickly as well. So it's a little bit more volatile, and that gets picked up in price data. Meanwhile, owner-occupier finance, this is really interesting. 24% in New South Wales, 23% in Victoria, 29% in Queensland, and 35% in WA. What do you notice about owner-occupier finance? The volatility is much lower. Yes, it will go up. when areas are doing well, but the volatility between states is much, much more constant, which makes sense. Owner-occupiers are simply there being like, I need a home to live in. They're not moving around, flocking around so much. They're there, they want a home to live in, while investors are moving their money around based on where it makes sense, and that's why you have such a large spread in investor housing finance. Something to really pay attention to. Where are investors looking? Housing finance data tells you that, and that can help you work out how your property market is doing right now beforehand. This comes out every single month, and it's a must read. When you go down, scroll down to the bottom of it, and you'll get that housing finance data by state, and you can get investor, owner, occupier splits. Look at that investor split to give you an insight as to where all the investors are looking. You don't need to call your real estate agent. You don't need to call your broker. You need to jump on the ABS website and it gives you everything you need. The second big metric I love to use, and this is Sydney and Melbourne specific, is auction clearance rates. This one is a highly topical one and it pisses so many people off, especially those that are trying to buy, that go on their auction results and they see that auction they went to on the weekend and it doesn't even appear in the data and no one was bidding. And they're like, auction clearance rates, that's a horrible data set to use. It's rubbish. It gets fudged around. And yeah, I'm not disagreeing with you. I think you might be right about that. The data gets fudged around. This is the bit that's more important to you. That data fudging, it doesn't change. It's consistent. It's been there in 2018, it's there in 2020, it's there in 2024. Agents don't always report that data straight away. But the following Thursday, CoreLogic released the actual clearance rate that actually happened, and they give it a little bit of breathing time to collect the data that actually happens on Saturday. And you can see the final clearance rate, and this number is real. It gives you how many auctions cleared over that weekend, and it might not show you the disaggregated data per property, but it gives you the total summary of how many auctions cleared that weekend. Now, what you want to look for here is the trend and the baseline number. In Sydney, an auction clearance rate of about 70% suggests house prices are rising. A number about 60% suggests house prices are probably stable and maybe moving backwards a little bit. 65% is kind of the equilibrium number, somewhere in that vicinity. If you're at 80%, Sydney is going through boom. If it's at 85%, I've seen this once before in early 2021, in about March, April 2021. If you go back in the data, you'll see it there. 85%. That's Sydney recording its highest monthly growth rate on record or inside decades. That is what happens. It means everyone goes to auction and be like, I'll buy it, I'll buy it, I'll buy it. I'm fighting over each other to go and buy it. When clearance rates are at 40 or 50%, house prices are moving backwards. It's ugly. We've seen this a couple of times recently. 2018, 2022, go through auction clearance rates and you'll see clearances around 45, 50%, really, really weak. Only half the auctions that go to market every weekend are clearing. This is the best thing about auction clearance rates and the real myth buster in terms of how quality the data is. The big myth buster is when you correlate house price change and final auction clearance rate data from Domain and CoreLogic, you correlate the two and put them on a chart and put a little bit of a lag for house prices in, because it takes a little bit of time for house prices to change based on the weekend results at auctions. You get this correlation. This is since 2007. 2007 all the way to 2023, this chart shows, and I can barely distinguish the red and blue lines. They are pretty much on top of each other. So you don't even need to look at price data. Forget about it. That bit of information is simply showing you auction clearance rate data. You can almost go one for one. If clearance rates are at this level and trending this way, house prices are trending this way. If clearance rates coming down, house prices coming down. That's why this data is so rich, and it's at your peril if you ignore auction clearance data, particularly for Sydney and Melbourne. The other capitals, not so much, because they don't actually go to auction, they sell in a different way. And the third and final way, now we're getting into more suburb-specific analysis, is to work out how your area is performing, is to do a really basic demand and supply ratio analysis. Now, that sounds really complicated. Demand, supply, ratio analysis. What's this guy on about? I've never heard of anything like that. But what you can do is use a couple really proxy data sets that are available to you, easily available, to work out how demand is performing. Two very simple ones that I like to look at is days on market. How long does it take to sell a property? If it's getting quicker and quicker, then it suggests that demand is pretty strong. The second one I look at is vendor discounting. How much are the people selling their homes discounting their sale price by to actually sell their home? Combine these two, you get a real soft indicator of demand. You can add in vacancy rates to see how the rental market's performing. You can put in asking prices, asking rents. You can throw in more demand data analysis, and you can get most of this sort of stuff on SQM research, on Domain, on CoreLogic, or you can go on specific data tools like higher than average growth or DSR ratio tools or microburbs to get this specific suburb data if you really want it. But what you're really doing is to assess demand and assess supply and check out how that market is going, and you get a real suburb level analysis of how demand is tracking. On supply, you want to look at stock on market. What's the percentage of homes available compared to usual, and what's the trend of what's going on in terms of the supply that's available? If there's a lot of new listings popping up in the same location, it's going to be the enemy of price growth. Even if there is more demand, it's going to drag prices down if there's more supply than demand. So if you really want to know how your suburb is going specifically, you want to do some sort of demand and supply analysis. In the comments below, in the description, I'm going to leave a few data tools out there available for you to do this suburb level analysis. So there you have it. Combine these three tools, my three favorites. The housing finance data to get that state-by-state analysis, the auction clearance rate data to get you that information as to what is happening right now and correlating that with price growth to give you what's happening in Sydney in general and Melbourne in general, and then the suburb level analysis that gives you how that particular location is performing. When you're doing suburb level analysis, you might want to do the area as well, like the eastern suburbs and the one area above it or below or attached to it, Bayside, for example, because they will correlate with each other. Right now in Sydney, you're seeing a little bit of a spread between west and east. West is doing really well, east is doing quite poorly at the moment, and the total end result is it's not really doing much at all when you aggregate all of that up. That's why you want to go suburb specific and Sydney specific and then look at the state data, doing all of this little bit of analysis, which you can do inside 15, 20 minutes at your computer, gives you the full breakdown of how your location is performing and whether it's a good time to sell or buy and how to negotiate with that real estate agent you're working with. If you enjoyed this video, hit that subscribe button and watch the next one up here that gives you more and more insight as to how the property market is performing in Australia.